Hello traders, this is Alla Peters on April 7th presenting webinar about Alpha Wave Trader Method and Fibonacci based strategies. I highly encourage you, please always remember, never ever trade with risks you cannot afford and spend time reviewing US government required disclaimer that will be posted as always on my video. How in the world did I come up with the idea of my method? Frankly, I've never imagined that that's something I would ever be involved in. Until 2008, I thought life was grand and easy, as I was investing in real estate and position trading as a hobby, stocks based on fundamentals. Today, I'm forever grateful for 2008 because I never imagined that price would be so flawless and so easy years later. In 2008, when market was crashing and burning, I continued believing in fundamentals. I never imagined that fundamentals can fail. Today, 8 years later, I know extremely clearly fundamentals are background noise. Fundamentals are books filled in by humans. Nothing can be more clear than what's rocking the world of finance, famous Valiant collapse. If you're well versed in the world of finance, you're reading publications, you're reading articles, as the collapse of Valiant had been exponential. Leading hedge funds in America involved withholding positions in this fund, when in fact any knowledgeable student who's been in the course more than few days would know. When price comes to Alpha Wave Trader proprietary Fibonacci level, such as reversal zone, you exit a position, when in fact this is the article from New York Times. Ouch. I put my name on the line every day. I tell you, don't listen to Aikman. He continued defending his stake in Valiant. What a shame. Collapse of 80%. As of now. Since last year I've been stating Valiant heading to zero. We will take a look where Valiant is in a little while today. This is exact same thing, an exact same picture that was happening in 2008. And this is a stock that started my adventure. I was holding famous Chesapeake Energy. Company had phenomenal fundamentals. I got out of the stock when stock was at 40. Today it looks like a breeze. If you're well versed in financial publications, you know what's happening with Chesapeake Energy today in 2016. When in fact price spelled out that Chesapeake Energy will crash and burn all the way to zero in 2008. And that's what's happening today, 8 years later. And that's exactly the same formula I use each and every day in day trading room, as you're witnessing each and every day on S&P Emini. And this is what video library and my blog showing daily. Everything has exact same formula. What I use on Valiant yearly, what I use on Apple monthly, is what I personally trade on my day trading account on S&P Emini. Volatility at all times low. But this morning, S&P tested your ultimate knowledge. Are you shocked by the collapse? This is Alpha Wave Trader proprietary Fibonacci levels. Looks familiar? Exact same reversal zone. Except all the levels spelled out by the price since a year ago playing out in front of you today. Price collapsing from weekly reversal zone, no surprise. Exact same area where sell-off had started in January. Exact same area where sell-off had ended at proprietary Fibonacci reversal levels. And if you know the rules, you understand extremely clearly how important tomorrow on S&P will be. All the same formula. It doesn't matter if you trade 1-minute chart, if you trade weekly chart, if you trade stocks options, if you trade Forex. Everything has exact same pattern and exact same sequence. And that's what I recognized and discovered in 2008. As of today, I developed more than 20 strategies. Vision on the price never ends. It's my hobby, it's my passion. I see market each and every day as flawless Fibonacci puzzle. No software, no indicators used of any kind. Price for entry and Fibonacci for exits. So let's take a look what's happening on Valiant today, as Aikman still telling the world buy Valiant, when I will tell you short every single bullish correction, as it has no meaning whatsoever. Today Valiant came to the end of the minor trend. This is exact same thing was happening this morning on S&P, when S&P struggled immensely. And this is exact same formula you see that happen on the trade we discussed with my students at the market close, that reached the end of the minor trend to the upside on S&P Emini. Everything has exact same pattern. Price stages, exact same formations. The only thing that's different is trader psychology and risk management. Formula remains the same. So, why in the world am I not using indicators? In 2008, when market was crashing and burning, I dived into the world of day trading. But few months into it, I recognized one thing very clearly. Every indicator I've ever came across is delayed. I ask myself, how can no one see this? Indicators look so flawless, so perfect, but after the fact. When there is something so much more powerful that will tell you when all these levels are far in advance. And it doesn't matter if you trade S&P Emini, and it doesn't matter if you trade Euro or any index or any commodity for that matter. So, this was one of the indicators I used. And if you're trading in today's markets, which have very little volatility, until today when collapse picked up the steam, in corrective markets, indicators will not help you. Here's one of the examples. One of my very favorite charts. This is corrective market on 13-minute chart. If you're using indicators in corrective markets, by the time you enter long, you're supposed to take short and vice versa. Indicators will never tell you when market in correction, when in fact it is the most crucial component of your trading and investment decisions. If you're a day trader and market in correction, you walk away from computer. And lately it's been happening non-stop. When volatility died out, here we go, another correction. Time and time again. Indicator will never tell you. Walk away from computer. Don't trade the correction. Your knowledge of the market will. When it comes to investment climate, you are using exact same formula. And you understand that on monthly chart, market in brutal correction, as I posted since 2014. Get the heck out of the markets when S&P will come to 2100, as selling pressure will step in. Nevertheless, S&P respecting crucial Fibonacci support level at 1800. And that's exactly what continue happening. Bearish correction, except on monthly chart it's 300-point range. On minute chart it's 2-point range. Formula remains the same. Once you understand Fibonacci levels, once you understand Fibonacci formula, you apply it not only to your day trading decisions, you're applying this formula to your investment decisions. You are not throwing away money out the window to your financial advisor, which most nowadays losing money, because how vicious market is in this correction on most indexes and most stocks. And for that reason, I recognized I have no interest in using moving averages crossovers, which work perfectly 20% of the time. But when market in correction, which market does 30 to 40% of the time, moving average is not a recipe for success. And for that reason, I continued studying price action, and I started documenting the patterns. And I recognize market is flawless Fibonacci puzzle, and no indicator on the planet will tell you that. Your knowledge of the market will. I work with traders who never placed a trade in their life, 2 hedge fund traders. I work with traders who trade 1-minute chart, 2 hedge fund traders who holding positions on stocks long term using exact same formula. This is a chart of one of my dearest graduates who's been trying and trading for over 20 years, spending over $400,000 on indicators. When I work with you one-on-one in mentoring session, I log into your computer, you log into mine. I asked Jim, what in the world did you spend your $400,000 on? Let me see. I counted more than 9 indicators and I said, forget it. How in the world can you see where price is? How in the world can you learn price action when in fact price is completely blocked by indicators? Jim knew nothing about price 20 years later. The most powerful component in your life is knowledge. When you invest in indicators versus knowledge, nothing good happens. Knowledge is power in everything. In order to drive a car, you must have knowledge of driving. In order to play baseball, you must be a knowledgeable baseball player. In order to operate on a patient, you must be a knowledgeable doctor. Shocker not. Same formula applies to everything in life. Be a knowledgeable trader, be a knowledgeable investor. Formula is in front of you. If you will remove all the indicators from your chart, you would recognize. Take a look at this. This is S&P Emini 3-minute chart. Let me ask you, what instrument is this next? That's when you start understanding. It's all the same formula. It doesn't matter if it's S&P Emini or if it's what instrument traders. Shocker, it's Euro. If I just change the name, price pattern will not change. It will remain the same. I will show you anything and everything that our graduates trade on. Stocks, options, Forex. Formula remains the same. You identify what you want to trade. As market, flawless Fibonacci puzzle. But every one of us has different psychology and different risk management. And for that reason, you have to identify, is day trading appropriate for you? Or are you firmly options trader? If day trading is appropriate for you, you would understand completely, clearly, why in the world S&P is crashing and burning and why the market closes finding bullish pullback. If you were in my trading room this morning, or if you're browsing the blog, you would see what I was projecting for the market close. I was projecting bullish rally from this area, as this is very powerful Fibonacci support. But the reason why you've been seeing horrific selling pressure, it's expected. Weekly at ultimate reversal, so is daily. And what will happen next tomorrow is crucial. And this is when your knowledge of the market is a key. And this is what price will tell us and we'll discuss in Fibonacci class tomorrow. Is this the end of the sell-off? Or is this just a little pause? This was the last bullish rally on S&P. Bearish correction started from reversal zone when we were in Fibonacci Trading Bootcamp in March. Found bullish power from this area. Exact same place. Exact same. But not push to the upside. Very, very weak. Totally different set of rules playing out today on S&P. And this is, if you browse my blog, social media, YouTube channel, was Wednesday FOMC minutes release. Wednesday morning, well before the minutes, I said, buckle up, price is heading here. Anyone surprised where collapse had started? This is the end of the minor trend on S&P Emini day trading chart. This is guiding light for all day trading entries. Every trade taken from Fibonacci level, not into Fibonacci level. Bullish rally came from reversal zone on hourly, as expected. And that's what we do. This morning I warned everyone, this is absolutely terrible correction. I don't expect what you witnessed yesterday, bullish rally. I expect further selling pressure. And that's crucial Fibonacci support and Fibonacci resistance, each and every time showing you far in advance what will happen next. And this is same formula playing out on daily, playing out on stocks, playing out on options, playing out on any instrument and any time frame. And if you come to the website, this will forever remain my favorite place. What graduates share and what they trade, confirming that market is just flawless Fibonacci puzzle, but each one of us likes to trade different instrument. Preston loves S&P and speaking very lovely about guiding light. So does Gian. William trades it all, options, stocks, and futures. Sam, paying for his children fabulous Harvard degree, trading options with my method. And that's why I live and breathe what I do. Once you know what price is telling you, all you have to do is decide what you want to trade. It's that simple. Day trading not for you, as Sam identified. Options, position trading, and investing available. So, what is Fibonacci? Fibonacci is perfect symmetry that's found in everything that surrounds us, from nature to reflection in the mirror, to anything and everything you see that's natural. Price is natural. Everything in life is Fibonacci. Human psychology has Fibonacci formula. Stock market is flawless Fibonacci puzzle, formed by these numbers. This is a key numbers to Fibonacci sequence that creates symmetry in everything that surrounds us. And if you understand and respect golden ratio and Fibonacci numbers, then you would understand completely that this is how market moves, and this is what I will be teaching tomorrow morning in Fibonacci class. So here we go. This is Fibonacci's secret to alpha wave trader method. What you see in front of you is that simple. What you see in front of you is what plays out in the market each and every day. This is how I see the markets. Major trend consists of 5 waves. Minor trend consists of 3 waves. Let me show you the importance and difference between two. My favorite chart, students call peacock chart. Here is an example. Euro started its collapse at the end of wave 5, crucial Fibonacci resistance level at 3800. Today, Euro at the end of the minor trend at very important end of minor trend, decision point 1. As I posted on social media for the last few years, short on Euro from 38 until 1, with 1 being only the end of the minor trend. Here is another example. Chinese index, famous SH comp. As posted on my LinkedIn profile, as posted on social media forever. And I will bring up to you posts with dates if you'd like to see those. Shanghai is heading into oblivion. Poor China. Heading to 2000, everything that's happening on China right now, all the bullish pullbacks are minor. As you see on this image, this was bullish major trend that reached reversal zone, and I'm projecting Chinese index at 2000. Breaks my heart when I keep reading articles about people being arrested and being blamed for this market collapse. No one can stop this. This Chinese index doing exact same thing as Euro, bouncing in bullish correction. And here we are. All the same formula. It doesn't matter if it's Euro. It doesn't matter if it's Chinese Dow. It doesn't matter if it's Apple. Were you terrified when Apple was crashing and burning from 130? Bullish trend was major. Bullish trend reached crucial Fibonacci support in 93, and what did Apple do? Let's take a look. Staged bullish rally, as I predicted, until 111. It's that simple. Formula remains the same. Does not matter what you trade. Bearish trend on Apple was minor, Apple reached the end of the minor trend. Let's take a look where Apple is today. Shock or not? As expected, from 93 until 111. So, why don't we open up the dates and see all the projections I just mentioned to you posted, not just on my blog, not just on my social media, not just on YouTube with videos, but on the most respected social media network to the world of finance, time and time again. Let's take a look. I projected that Amazon will head to 500. Take a look on the dates and take a look on the post. Where is Amazon and what has it done? Exact same dates, exact same posts about Apple and Shanghai Index. Collapse on Amazon started from reversal though. And did Amazon collapse to 500? Let's take a look. How in the world did I know? Simple. Price told me so. Get the heck out of Amazon when Amazon reached reversal zone. Don't lose sleep. Don't hire financial advisor. Simply apply Fibonacci levels. And you will witness this exact same formula on S&P 2-minute chart. As price pattern remains the same. The only difference is risk management and trader psychology. And as I stated on social media against famous Valiant, that's still quite upsetting me because it breaks my heart when people continue being long Valiant as Valiant continue crushing and burning. I remind it all, pretty please, look at his portfolio, one of the top hedge funds in America, down almost 80%. So, if you know Fibonacci, you're much smarter than one of the top hedge funds in America. You are not having the worst year in history of hedge funds. Clear? Right now he's down more than 60% from last year. So when I see that someone holding long positions on the stocks that should be short, I take it personally. Price is very simple. If you know this formula, you would be exiting Valiant. You would be only taking your point of entry at the inception of the trend. You would never be shorting wave 2. You would be walking away from computer. Last point of entry at the inception of wave 3. You would always forever remember very crucial rule. You would never take an entry into Fibonacci resistance. If you had not acquired a position at the inception of wave 3, you're simply not touching the market. The worst place to be in the market is overextended rally and overextended collapses. This is exact same thing I posted about oil for years. Years and years. Since 2011, that oil heading to 30. Is this time to buy oil stocks? Oil in massive bullish correction, traders. If you intend to hold oil for years, oil is setting up for something, but by far not yet if you intend to hold the position for months and years to come. Oil staged very impressive bullish correction in 2015, but the fact that it ended at crucial Fibonacci resistance shown me very clearly this is correction only. Oil struggled for years to break through famous 86. Remember where euro is? At 1. Once oil broke through 86, oil went into free fall. But corrective bullish dance remains. Looks interesting. Hourly and daily longs everywhere. But when it comes to investment positions, not yet, because the rules are not met. Using exact same formula I use on S&P 5-minute chart, I use on S&P hourly, as price pattern remains exactly identical to this. And if you just learn to identify this pattern, this is all you need. You can trade Nasdaq, you can trade ranging markets, you can trade trending markets, and you understand extremely clearly. When market is giving you narrow range, you cannot take advantage of spectacular rallies. What is the difference between market now versus market January? Take a look on my blog. Until market continued its collapse today, this is average trade 3 point, 2 point, very, very calm and very slow, exhausted market. But let's remember what price was telling us and what was happening in the market in January. Volatility was extreme, and targets spelled out by Fibonacci were different. Average trade was 8-10 points. Typical day 15 points, 12 points, 7 points. All the stops, all the targets spelled out by Fibonacci, 25 points. In volatile markets, if you're a knowledgeable trader and your execution is top-notch, you take advantage of these rallies. You take advantage of these collapses. But when market comes to complete quiet place, as it's been dancing in correction 80% of the time until today's absolute stunning collapse, you must respect that. 8, 10, 15 point range is not present. It's present only 20% of the time. Markets ranging 80%. Never forget that. So, most important rule in Alpha Wave Trader Method and most important target, Wave 3. You never acquire position at the end of Wave 3. Never, ever, ever. If you do, if you buy overextended rallies or sell overextended collapses, nothing good ever happens. Absolutely essential and crucial to remember that. And if you're a day trader, you absolutely remember what's been happening in the markets this week, when stunning and shocking collapses and bullish rallies were ending instantly. So I highly encourage you browse the video from Monday. This was our trade. This is where it ended. As I said, this is our exit. Take a look at this. Monday it was resistance. This morning it was support. Play by the rules and know where to exit and know what not to short into. Price comes to reversal zone, you monitor for reversal. And if you do, you would respect the fact that it's not just S&P monthly at reversal zone, it's S&P yearly dancing in brutal correction. All the levels spelled out by the price since 2009, playing out today in front of you in 2016 and can continue play out for years to come. As long as price will continue respecting 1800, crucial Fibonacci support, the dance is on. And it's not a pretty one when it comes to investments. When it comes to knowledgeable trader, you see reversal zone, you know the rules, you take a trade. You see reversal zone, rules are not met, you do not take a trade. That's simple. And that's the key rule. No entry into Fibonacci resistance. To the downside, no entry into Fibonacci support, or you entering into reversal zone. Same formula applies to Euro's 3-minute chart. Flawless, stunning structure. Or oil's 60-minute chart, respecting Fibonacci levels. This is one of the cleanest charts ever. If you look on this chart and you don't know what this means, I highly encourage you learn price action, because it doesn't become any more simple. The most simple and the most clear, flawless 5-wave major trend that's respecting Fibonacci levels. So here we go. Alpha Wave Trader method consists of two key concepts: price action for entry and Fibonacci for exits. All the stops and targets spelled out by the price and Fibonacci. Price structure dictates how big your stop and your target will be. Fibonacci give you complete accuracy. In day trading to the tick, in position trading to very, very powerful levels that I will show you time and time again in the questions I look forward hearing from you. Here's an example of something extremely powerful and very interesting that's happening now. Here's gold. Did you exit gold in 2011? And did you enter gold since November 2015? As posted on social media everywhere? As gold reached reversal zone? Where is gold now? Very close to 1300. I absolutely expect gold to make it there. 1300 is broken, gold will head to 1400 and higher up. Your point of entry and your risk management will make a world of difference. And that's what happened on gold. And that's the formula. No software, no indicators. Method applies to any instrument, any platform, any time frame. I will post the invitation to the trading room in just a moment, where I look forward to seeing you on Monday morning. Friday is devoted to Fibonacci education. I show in Friday morning class high probability entries, high probability targets, and areas of inherent danger, which is forever will remain the most crucial component of your investment and trading decisions. You must know when to stay out of the markets. And if you do, you cut down on your computer time significantly as a day trader, and you cut down on your stress level as an investor. When you come to the website, you click About. You can learn about the method, you can learn about my story, and you can meet the graduates and listen to their testimonies. I fly all over the world meeting with the students, from Singapore to Middle East to last week I was in New York. So here's Singapore 2012. Here is New York last week, 2 weeks ago. Michael, supporting his family of 4, trading Alpha Wave Trader on S&P. Ron and Neil just signed up for the course. William is the one who is trading options, S&P. Randy trading Forex. Randy is a doctor in Canada and just flew to New York to have lunch with us. And that's the reason I live and breathe what I do. And if you would like to join us, click on Learn, review the information about the course, listen to the students. Course is ongoing. Group 8 weeks. Classes daily. Live guided trading, pre-market analysis. Private mentoring, 16 weeks. We're meeting one-on-one. All the group educations, everything included. Everything live in online room, just like you see it now. Key classes, Monday at 2 p.m. and Friday at 11 a.m., not p.m. Ouch. Any questions? Always feel free to call or email me 925-257-4298 or info@fibinstitute.com. So, ladies and gentlemen, I look forward to your questions. Please post the questions about the instrument of your choice. I would like to go straight to the instrument manager, put the instruments on the charts so we don't spend time on anything else. So, no time frame is posted. Scott, I already looked on gold, I already looked on oil. YM, I have no idea what is 6Y is. 6Y. Do not see it on my chart. What is in the world 6Y? So let's go to YM. While you trying to identify or put the name of the instrument as 6Y not present on Ninja. YM is Dow. No knowledgeable trader ever day trades Dow. No knowledgeable day trader will ever touch it with a lightning pole, as you will never make any money. The most expensive future, you make one tick, you walk away with 0. S&P, you make one tick, you walk away with $7. Nasdaq identical to Dow. Next question, Euro Future. Any other questions? Pretty please do post. And again, if no time frame attached to it, I will paste the first available. So no time frame on Dow? Weekly chart is extremely clean. Very important day on Dow tomorrow. And very powerful reminder. When price comes to reversal zone, this is not the place you want to enter the position. This is a place where you start seeing 80% of the time complete collapse, as you saw on Valiant, as you saw on Apple, as you saw on Euro. 20% of the time correction, and then collapse. So, will Dow crash and burn next? Or is this only a correction? We'll find out tomorrow. We know the rules and we know what to pay attention to, and we'll dissect that in Fibonacci class. So, next question, Euro Future. I expect Euro to look exact same way as Euro Dollar. Euro Future Weekly. Where is it heading to and what to expect? This is where Euro Future is struggling right now. Euro Weekly in front of you. No surprise here whatsoever. Euro struggled for the last 2 months to break through this area. Now heading to 11.6. And this is very powerful reminder. Euro Weekly to the upside. End of minor trend. Remember the images on other instruments such as Apple, the end of the minor trend where Apple staged pretty impressive bullish push until 111. Here it's ultimate support. Here it's crucial resistance. MU monthly currently in bullish correction. This is time for a lovely. So, MU is capable of staging pretty impressive bullish rally as it reached exhaustion levels. But remember oil and remember MU. This was bullish correction. Looks familiar? The importance of Fibonacci resistance and the importance of separating correction from reversal, never to be ignored. And this is a reminder about what we discussed earlier, Stan, in case you missed. This is where gold had been a while ago at the end of the minor trend. This is where it traced. Gold is heading to 1300. After 1300 it will head to 1400. Your point of entry 1000, whatever that 1070 last November. So this is what method all about. You will forever benefit, not as a day trader only, but as an investor. Any other questions, traders? If you would like to see the latest trades that I demonstrate method on S&P Emini Future short-term charts from 1 minute to 21 minutes, you will see accuracy instantly in day trading room. But it's exact same formula that applies to weekly, monthly, yearly 4-hour charts, stocks, options, as formula remains the same. So if you have any questions, always review the information on the website about the education course, about the method, listen to graduates, and as always, feel free to contact me 925-257-4298 or info@fibinstitute.com. Thank you so much, traders. My joy and pleasure. Look forward to seeing you on Monday.